All right, so what if I told you that investing and coffee are somehow way more similar than you think? Okay, honestly, I don't know how I'm gonna put two and two together. I'm probably gonna have to wing it really hard. I don't even have coffee. It's a weird morning. One second, I'll be right back. All right, that's better. So we can all agree that investing is ridiculously important to help stable your future. I know in the last video, I talked more about budgeting and how to make sure you can save more money with the income that you're receiving. But what's just as important as saving your money is maximizing your money. So we're gonna talk a little bit about that, and we're gonna talk a little bit about something called dividend investment. Let's get started. What's going on, guys? My name is Darren Jackson, and today I wanted to talk to you about investing, and not just any investing. We're going to talk about dividend investing. So I've been dividend investing for almost 10. Okay, you know what? Wait a minute. I think we're going a little too fast. First, before I talk to you about my history with dividend investing, let's answer the most important question: what is dividend investing? So picture this, there's a company called Company X, and Company X does something specific. That part doesn't really matter, but they are juggernauts. They are killing it in whatever game that they currently have, and they've been killing it for the first 5 years or so. Not only are they seeing an increase in their net worth, which is allowing them to pay back their employees and to put money towards their company so they can do whatever they need to do, they're starting to see a trend of an increase in their excess incomes. And after 5 more years, that trend is still shooting up. Every month, every quarter, every year, the amount of excess money that they're receiving is going higher and higher and higher. So corporate comes together and asks themselves this question: what should we do with the excess money that we're receiving every year? And after a lot of thinking and deliberation, they decide, what if we gave it back to the people? Sounds weird, right? Well, actually not really. We'll talk about that in a little bit. So they decide that we're gonna take our excess funds and we're gonna give it back to the people. But obviously not just everybody. We're gonna give it back to our shareholders. We're gonna give it back to the people that are actually partaking in our company, that are partial owners in our company, and that are putting money towards our company to say thank you. As a matter of fact, we're gonna give them a percentage of that current worth of our share of stock back to the investor just to say thank you once again. So what corporate does is they take those excess funds, they sit around a table on a specific date, and they have a meeting to determine how much money we're gonna give back to our shareholders. And they decide that that money is gonna be a percentage of whatever that current stock worth is at that the shareholder has to own that share of stock before that specific date so they can get that dividend by that period of time. And then eventually, whether it's quarterly or sometimes even monthly, that shareholder will receive that check into their brokerage account worth a small percentage of what that share is worth at this point. And that percentage is a dividend. So now we can talk about exactly why you should invest in dividends. So reason number one, it's super easy. A lot of styles of investment, you have to do a whole lot of research and spend a whole lot of time if you have it. And occasionally you have to spend some money to get to know the strategy and the best way to attack that strategy in regards to investing, whether it's call riding or options trading or anything like that. With dividend investment, the only information you need to understand besides the numbers and what percentages are good, which is something I'll get into later, you just need to understand the company that you're investing into. So it's a lot easier if the company you want to invest into is a company that's part of your everyday life, like Starbucks. This is actually not from Starbucks, this is from HEB, but I go to Starbucks every now and then if I want to, splurge a little bit. But it's easier to get part of a company that you are aware of, like Starbucks, for example, like Walmart, because there's a reason why you go to that corporation or why you go to that store so often, why you see other people going into that store. But even if you are very familiar with that company, you also want to be aware of what their goals are, what their short-term goals are, what their long-term goals are. Because not only is that going to potentially determine the trend that the actual price per share is, but in the long run, it could determine what the dividend percentage that they give to their shareholders is. So you definitely want to keep that in mind. I remember I bought 6 shares of Ford a while back because Ford is a very popular company. You see Ford F-150s everywhere. And I also heard that they were purchasing property in the Texas area so they can do studies on electric vehicles, which is really cool. But what I also realized is that their marketing outside the US is very low. and the majority of their funds comes in from that Ford F-150, and prices were going down and down as time went by, even though I was getting dividends. So knowing that it's possible if they're having a trend of losing funds may negatively impact the shareholder on a dividend basis, because they may show a decrease in excess funds, therefore not giving back as much in dividends to the shareholders. So I sold that, and the other day I checked and it went from a little over $9 when I bought it to about $8. So I think I made the right decision. Now, another way you should invest in dividends, because it's a form of passive income. And now passive income is simply income that you receive for doing little to absolutely no work. And with dividend investing, the only work you're doing is researching the company and buying a share of stock. And that's it. You just sit back, you let the company grow, you let it adjust, you let it fluctuate, increase, decrease over time, and dividend checks are coming and going and coming and going. You're making money regardless of what happens, as long as you're investing in these healthy corporations. Now keep in mind, dividend investing is not a get-rich-quick scheme. It's not gonna be something like options trading where you can put a bunch of money in and potentially get a lot of money back in a short period of time. This is a slow and steady race. And honestly, you gotta feed the beast to be beastly. What I mean by that is, if you expect a large return in dividend checks, you need to put a large amount of money into your stock portfolio. And that can take a lot of time. If you're lucky enough to have that amount of money, then by all means, get it done. But a weekly transfer into your brokerage, monthly, quarterly, whatever, you'll definitely get there. So as long as you know it takes time, you're gonna be fine. So me personally, I started investing in dividend trading about 10 months ago. I started in May of last year, and my portfolio balance has grown over time, just again because of the natural increase in the stock market. Typically stock markets are known to increase about 10% on a yearly basis. So I was definitely experimenting that, and if your stock portfolio is good enough, you may start to beat that trend over time, which is a really good thing. But based off my dividends, or based off the stocks that I was invested in and how many I had, I was projecting to make about $60 a year on dividend investing. Now that doesn't sound like a lot. Of course, it really isn't compared to a lot of other people that are making even more on dividends, but considering the amount of money I was putting in, it is a bit, and knowing that I just started, it wasn't a full year, and I can definitely increase over time like you will as well. And speaking of me investing in dividends, I'm gonna give you a quick example of a healthy company that you can get into. So obviously a very popular company is Starbucks. I really like this cup, World's Best Boss. I'm telling you guys, The Office, best show ever. Okay, so we're done talking about that now. Starbucks. It's a very, very popular company. There's a Starbucks everywhere. I'm sure if you threw a rock in the air, you're gonna hit a Starbucks. All right, so right now Starbucks has about a 1.87% dividend yield, which means they're gonna give you 1.87% back of what the current share of stock worth is as a dividend check on an annual basis. And that can be, again, quarterly or sometimes monthly. So when I purchased this share, it was at about $85-ish, and I'm only buying it, even though I know that the trend right now is going down. That has a lot to do with a lot that's going on in certain parts of the country at the moment, but hopefully that turns up at some point pretty soon. I know that this company is super healthy, and they have a trend going up over the past year and the past 5 years. So of course I'm gonna buy a share of stock in it. And based off that dividend percentage that I'm getting every year, I'm expecting almost $2 back per share per year from that one share of Starbucks. So if I end up eventually buying 2 shares of Starbucks, not only am I getting money back from how it's doing in the stock market in general, but I'm also getting twice as much back in dividend checks. So that's about $4 for Starbucks. And it just keeps going and going. The more amounts of shares you have in a specific company, the more dividends you're getting back. So that's another good thing, and that's something that I enjoy. So we'll definitely get back to that share at a later period of time just to see how it went. And there it is, guys. It's dividend investing. I know I talked a lot about how to save money, but maximizing your income as well in a safe manner, of course, is definitely important. It can definitely lead to some great things. Now I'm gonna leave a link in my description below for an invitation to use Robinhood. Right now you can actually invest for free, so as soon as you sign up, they'll give you a free share of stock. And quick disclaimer, I'm not receiving any money from Robinhood, but I will receive a really small commission if you guys do use that link to sign up. So, help a brother out. I really appreciate it, but it is what it is. So I appreciate you guys coming by. Please leave a like if you like this video, leave a comment about anything, if there's anything that you have a question about, anything you feel like I said wrong, whatever, drop it down in the comments. And if you like this channel, you want to help continue to see it grow, please click that subscribe button and make sure you click that notification button as well so you can know when I release another video. It's really important that you know. Seriously. All right, well, I appreciate you guys stopping by. Until next Thursday, take care.